Howdy, I hope you're having a great day. Silver Trade here again with another video. Today we're going to be talking about Roaring Katie shaking the bushes once again. He just got a new achievement. Warrants, are they good or bad? And Rage Informal, our favorite, just made another post. And as you can tell, I've lost my voice, but I kind of like it. It's kind of like a midnight radio host kind of voice. And the show must go on. And don't click off because of that, because this is going to be the first time that we do a giveaway in our video. But please remember, none of this is financial advice, we are not financial advisors, and this video is made for entertainment purposes only. Ryan Cohen on X said, "Not bad for a piece of crap retailer." He said this on September 9th of 2025. And yeah, like we're always saying, GameStop is doing amazing. And on GameStop's last earnings report, they talked about how they were going to be doing warrants. And for anybody who doesn't know what that is, here's a really brief explanation. For every 10 shares of GME stock that you own, you will be awarded one warrant on the ticker symbol GMEWS. So every 10 shares of GameStop that you have, you'll be given one warrant. That warrant is basically a call option at the $32 strike. So however many shares you have on October 3rd, that's the cutoff date. And then on October 7th is when they're going to start handing out those warrants. And a lot of people are thinking that there's going to be way more warrants than there is supposed to be. That is not the case at all. The amount of warrants is hard capped at 59 million warrants. They're doing 45 million warrants for GameStop's common stock, and they're doing another 14 million warrants for the convertible notes that come due in 2030 and 2032. So in total, 59 million warrants. That's how GameStop filed it, and on the SEC's FAQ, it says up to approximately 59 million warrants. It cannot go above that number. So I'm pretty sure that there's going to be a lot of people that do not get the correct amount of warrants or get any warrants at all. And if that happens, then those people who do not receive warrants are going to receive the cash value for those warrants from their broker. Which really stinks, because if GameStop is not above $32 per share, those warrants or call options are not going to be worth very much at all. And those warrants at the $32 strike price expire on October 30th of 2026. And whenever we exercise those warrants, that's going to put $32 right in GameStop's pocket. So GameStop could raise up to $1.9 billion if everybody exercises their warrants. This is just my opinion, but in my opinion, I think it's much better to hang on to those warrants until GameStop gets well above $32 per share, and then you can just save up that capital, because they don't expire until October 30th of 2026. And the warrants do not have theta decay, so it really makes sense to hang on to them long term. But I really think there's going to be a lot of people, maybe even the majority of people, are not going to be receiving warrants. And if they get the cash amount that that warrant is worth on October 7th, because that's when you'll get that cash if you don't get your warrant. And if you don't get those warrants from your brokerage, you'll be getting the cash amount that that warrant is worth. So if GameStop is below $32 per share, those warrants are going to be worth almost nothing. And the warrants that we will be receiving, if we actually do get them, will be under a different ticker called GMEWS. This might be GameStop's way of making it abundantly clear that there are synthetic shares floating around the market. Because there's going to be a ton of people posting about how they didn't get their warrants when October 7th rolls around. So this is a genius play by GameStop. And them doing these warrants and the final date being October 3rd to get your shares is going to create a lot more buying pressure for GameStop, because people want to get as many shares as possible before the warrant deadline. The influx of posts saying "I'm going to exercise right away" seems like bots or just people eating crayons. Do not listen to them if you like money. Sure, exercising warrants does give GameStop money, but they aren't cash starved. So there's literally zero reason to exercise early, especially not below $32. GameStop gets the same $32 per share whether you exercise right away when you get your warrants or in 2026, and also regardless of whether the share price is 26, 60, or 45, early exercise just gives them the money sooner while you're killing your upside and helping shorts by increasing the float. So I mean, technically you'd be doing the opposite of helping, because we already know that the float is naked shorted as it is. So there's no need to add to it any sooner than necessary. If you want to support GameStop in the meantime, buy from their store instead. I've been supporting GameStop a lot lately by buying a ton of Pokemon cards from them. We're going to start doing giveaways on this channel for the first time. To enter the giveaway, please subscribe and hit that like button for me. We're going to have 3 blessed people get 3 packs of Journey Together Pokemon cards from me. And this is the first time we're ever doing it, so please hit that like button and make sure you're subscribed. Oh, and also, every 1 new subscriber I get is going to be $1 that I donate to St. Jude's Children's Hospital. So far, we've raised over $220 doing that. Thank you a million for that. So make sure and hit that like button and please subscribe. And really quick, before we talk about Roaring Kitty's new achievement, GME serialized warrants, some digging into paperwork from May 2024. So in another post, someone mentioned serialized information embedded into the warrants. I immediately thought about a specific filing that was made last year during DFV's meme craze. Some good paperwork. Roaring Kitty back in 2024 posted, "They're actually very good at paperwork." He means filing 424B5 from May 17th of 2024, where serialized units are mentioned regarding the issuance of warrants. See page 13. Instead of page 13, I should really say PG13, just like Ryan Cohen posted with his narwhal picture from 2021. This is what is on page 13. Please pause the video if you would like to read the blue text. Long story short, GameStop could issue units consisting of at least 2 securities described in this prospectus. These could be common stock, the classic, nothing special, but a MOAS ticket at least. Preferred stock, also serialized but with special rights. As far as I remember, those shares, i.e. the owners of them, have preferred rights in liquidation and bankruptcy situations. But guess what? GameStop ain't gonna go bankrupt for a long time. Maybe never. Depository shares? A whole new depository other than the DTCC with a separate deposit agreement with again a series of depository shares? The depository shares will be evidenced by depository receipts issued pursuant to the applicable deposit agreement. Depository receipts will be distributed to those persons purchasing the fractional interest in shares of preferred stock as described in the applicable prospect supplement. Copies of the applicable form of deposit agreement and depository receipt may be obtained from us upon request, and the statements made hereunder relating to the depository agreement and the depository receipts to be issued thereunder are summaries of certain provisions therefore and do not purport to be complete and are subject to and qualified in their entry by reference to all of the provisions of the applicable deposit agreement and related depository receipts. Sounds like a certain entity would be in trouble if it would, let's say, counterfeit GameStop shares? And if you're like me and that went straight over your head, here's a brief summary. A depository receipt is basically proof that you own a slice of a preferred stock. The company sets it up under a legal deposit agreement, and that agreement locks in exactly how many receipts can exist. So if more receipts suddenly showed up than what the agreement allows, it would be obvious fraud. You can't just make up extras. That's what he's hinting at. If brokers or institutions ever tried something like counterfeiting, it would blow up fast, because the receipts are capped and controlled by a legal contract, not the DTCC. Ryan Cohen is a freaking genius. And I'm pretty excited because this happened yesterday, September 13th. On Reddit, the user, The Roaring Kitty, the real one, got a new achievement, Banana Baby, on September 13th. So he started up that Reddit streak once again. So he's shaking the bushes once again, which is very exciting. We've seen him do this a lot though. We've seen him get an achievement here, get one on this account, one on that account, but they're starting to be much more frequent. He got an achievement on one of his accounts like last week or 2 weeks ago, and now he's gotten another achievement. He's shaking the bushes much more frequently, which really makes me wonder if he's about to come back. And we're going to have to see if this Reddit streak of his continues. Maybe it's his plan to come back around October 3rd or maybe October 7th, so that way GameStop gets well above that $32 share price, and then those warrants will be worth a ton for investors. Either way, I'm super happy to see that he is much more frequently getting achievements. And once again, an amazing post from Region Formal. This slide shows GameStop's quarterly financial results and my pre-Q2 earnings prediction. The EPS that Region Formal predicted was 20 cents. And here's the actual performance. Earnings per share was 31 cents, which is an amazing result. But how did GameStop do it? Oh yeah, and by the way, the PowerPack's website revenue wasn't even included on this earnings report, which has me so excited for the next earnings report. The first big reason that GameStop beat so well is the hugely impressive increase in net sales, the product category mix of which is shown in the table below. So, hardware and accessories for Q2 of 2024 brought in $450 million. In Q2 of 2025, hardware and accessories brought in almost $600 million for GameStop. Software went down slightly. For Q2 of 2024, they made about $200 million with software, while this year, Q2 of 2025, they only made about $150 million. But their collectibles had a substantial jump. Q2 of 2024 was about $140 million. Q2 of 2025, collectibles made them almost $230 million. Q2 of this year brought in almost $1 billion. I thought we were going to be at $1 billion, but we were slightly below it. $972 million to be exact, while last year we didn't even hit $800 million. They almost made $200 million more dollars compared to the same quarter last year. They are doing amazing things, and they didn't even include the power packs. Note the flip between software and collectibles for the second largest category. GameStop has also acknowledged this. The increase in consolidated net sales for the 3 months ended August 2nd of 2025 compared to the prior year was primarily due to the $140 million or 31.2% increase in the sale of hardware and accessories, and an $88 million or 63% increase in the sales of collectibles. So a big increase in hardware sales and an even bigger increase in the sale of collectibles. So Region Formal pulled out Nintendo's financial performance data since the Switch 2 was launched, and most likely this was the main reason for GameStop's hardware sale increasing so massively in Q2. Encircled is the volume of sales of the Switch 2 in the Americas, in which the United States, GameStop's base, is its largest constitute. Even up to the end of June, only 2/3 of the way through Q2 saw a huge increase in unit sales of Nintendo consoles, a large portion of which would have been sold by GameStop in the United States. One could have anticipated this, but what cannot be denied is the success of the partnership with PSA, which has been going from strength to strength since its launch. And seriously, PSA is the only way to get your cards graded. They are hands down the most reputable, and I am very happy that GameStop decided to partner with PSA. The second largest card grader in America has actually been caught before doing some really shady stuff. There was one account they had where they had 83 submissions and every one of them got a pristine 10. That is literally mathematically impossible. I'm very happy that GameStop did not go with the shady company and went with the much more reputable PSA. Jordan Fong of Turlock, California was shocked when his Umbreon V became our 1 millionth card graded with PSA. To mark the milestone, we're giving him a year of free grades on us. You can see right here they posted that back on July of 2025. This can be seen by the continuous growth in revenue from collectibles, which reached a new high in Q2 and shows no sign of stopping. And GameStop is going to start including their Power Packs website revenue in Q3. 2 slides from a post I made last year about how the closing down of unprofitable stores, such facility and staff reductions of unprofitable operations will undoubtedly increase profitability. For every laid off employee, that's about $40,000 back in GameStop's pocket. But yes, it does stink that people are losing jobs. It will at first be expensive and not lead to an immediately positive impact. So I think it is entirely to be expected that profitability will be volatile during this period of shedding loss-making stores, before the positive impacts of those business decisions result in the core operations turning a profit. Here's another post that Region Formal made about what may happen when cost cutting is complete. And now look at those 2 dotted trend lines. This is a fascinating picture. As you can see, the US business has turned itself around enormously in the last 2 years, whereas the businesses in other countries and regions has basically declined consistently. With these thoughts in mind, check out this future prediction I made for US operations. I used some seasonal trend analysis to help produce this for what the rest of 2025 might generate for the US operations. Of course, we can refine this with more data, but it is really looking incredibly bullish for the United States. And now contrast that the $57 million prediction for Q2 with the actual result coming in was $63 million generated. This indicates to me several things. The store closures of unprofitable stores has probably come to an end now in the United States, as the remaining stores are all ones making money. Number 2. The residual costs from previous closures have also probably been reduced to a minimum now. And number 3, GameStop's SG&A expenses for the US business has dropped to an incredibly low level. SG&A stands for Selling, General, and Administrative Expenses. Here I have taken that previous table and converted the various costs associated with running the core operations business, i.e. the stores and online, into percentage of net sales. The circled figure, US stores SG&A expenses, being at about 21% is almost unbelievable. It's the main reason why his EPS figure was not close enough, as he thought the selling, general, and administrative expenses were going to be higher. I did not think GameStop would get to the low 20s on SG&A until maybe 2027. So what are the implications of the much higher and anticipated net sales plus lean SG&A expense rate in the US and overall? In combination, this of course impacts the operating income profit figure, so note that the 2% rates above are for the US and global. Every year, New York University researches data on operating profit in various industries, and this is then used by third parties, e.g. Vina. Note the average for all industries is about 8.5%. For retail, it is much lower, like 3%. Contrast those with GameStop's figures of double that overall and nearly triple in the United States. Going back, we can see operating income 8.8% loss for the United States, and then the global is 6.8%. The average gross profit across all industries is about 36.5%, while the average net profit margin is about 8.5%. GameStop's Q2 operating profitability, particularly in the United States, is at a level that even Amazon has not achieved for the vast majority of its existence. So for the moment, forget about the money that GameStop is making from its Bitcoin investment and the huge amounts it has been making from simply putting its cash holdings into T-bills. We've talked about that. We've talked about them doing that with the T-bills before. They put all $8 billion in there, and I think they're making like 5% or like 4.7% on $8 billion. And also, however many billions it may make from the M&As and other future investments, using that enormous cash stockpile it is holding. And not to forget the proceeds it will also make from the warrants and associated instruments. All that is making them and will make them an enormous amount of investment income. But what 2025 Q2 really demonstrates is that their core operations, which for a while was GameStop's weak point, is now becoming their cash cow. And Ryan Cohen knows this, and that's why he said, "Not bad for a piece of crap retailer." Seriously, thank you so much if you made it this far in the video and putting up with my scratchy voice. I hope you found value in this. Christ is King, and God bless you.